Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the S&P 500 ETF, typically known as the spiders, and that's SPY. And as I zoom in here, you'll see that I left my lines on the chart from last week, so you can see exactly how the forecast worked out, and it worked out exactly as I said it would. This was the line that I drew. I said we would most likely break into new highs, and we did break out of this resistance area. We continued higher, and look down at the bottom. You'll see stochastics is now overbought. The CCI is overbought. And what does that mean for next week? Well, we still have some pretty good volume on the close today. Didn't quite surpass the volume from Thursday, but almost matched it. And that tells us that the buyers are still in force, but I don't think they're going to rally it too much higher. This is what I think we're going to see for next week. Early on, I believe we're going to go a little bit higher because we closed right on the highs. So we'll go a little bit higher, and then I think we're going to see a drop in the volume, and the price will most likely drop down to fill the gap that was left today. You see this as I zoom in here with my magnifying glass right there. You'll see that from this high to this low right there is an open gap, and 80% of the time gaps fill. So we have this gap below the market, and we still have this open gap way down here below the market, which will also act as a price magnet. So early on, again, to repeat, we'll see Monday and Tuesday most likely higher prices, then later in the week we'll start to sell off. Now let's go right to the VIX. This is the volatility index. It's a contrarian indicator to the S&P. And I said last week we would most likely drop to test support, and that support level was drawn from the lows right here on July 25th, and that's a flatline support level. And look at that. We came right to support, and there's a good chance we'll start to bounce from here. So what I'm going to do is I'm just going to extend this out just a little bit like that. And I think we still have a little bit more to go on the downside, but I think that support level is going to hold, and then we're going to continue on that bounce, which again is bearish for the S&P. This is still an open gap on the VIX above the market. I think that has a 100% chance of filling, maybe not Monday, maybe not next week, but definitely will eventually fill. And as that gap fills and the prices move higher, that's going to be bearish for the markets. Now let's look at a more broad-based index in the Russell 2000. Ticker symbol RUT. I said we would go higher to test resistance, with the end of this line being my target, and look at that. We are right within pennies of that. I think we're going to continue to go up to test that with the Russell 2000. If you look below, you can see that there's some momentum indicators that are still showing a shift in momentum higher, even though both the stochastics and the CCI are overbought. I think we're going to see a little bit higher on the Russell 2000, and then just like that, we're going to pull back as it bumps its head against the ceiling right there. Looking at the NASDAQ market through the Qs, this is the Invesco QQQ Trust. Again, I said that we would break out, go higher. That's exactly what we did. Let me zoom in a little bit more so you can see how amazing this really is. The end of the line right there is my target from last week. Remember, none of this price action was here. It was a blank slate. We closed right at my price target, just like that. I think the Qs are going to pull back right after a slight rally on Monday. I think what's driving this Apple tech sector is still going higher, but look at the volume. Down below, you can see there is a drop in volume, probably a 15 to 20% drop in volume. That's telling us there's a weakness in that buying pressure moving forward. So initially, I think that momentum will continue higher, and then we'll start to pull back just like that. Now, if we look at the diamonds right here, look at that. Forecast line intact. I said we would move up to test resistance. We closed right at resistance. End of the line right there being my target. I'm going to erase that now that we've hit it and tell you we're most likely going to break out into new high territory for the diamonds, and then start to pull back, maybe even breaking back down below that newly established resistance right here. I think we can go up briefly and then pull back. Remember what I said back here on the 18th of October, this is a false signal. The market never did get this high, but they never removed that from the charting system. So this is the resistance high. I think we're going to break out, set new records, and we're going to have another little round with volatility as we go up and then pull back again. So that's it for the weekly market report. I hope you're enjoying this. It's very accurate. Follow the technical signals. Follow our website, themarketguys.com. Go through all the videos so you know exactly what I'm talking about and the language that we use. And you have a great rest of the weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.